Hello, good morning, good morning. We're back, chat. We're back. 2026. New year up ahead of us. Got a new spreadsheet here. Got a new spreadsheet over here. Looking to fill this thing. Now this is going to be pretty interesting year here. We have it already in the first week. Next week, Powell should a new Fed chair should be mentioned on a Friday. I think that's going to be. Get the microphone up here. Yeah, I think it's gonna be on a Friday. We're gonna get a new Fed chair in, and then on the like 28th, 29th, somewhere around there, we're gonna have the FOMC. We're gonna have FOMC here in about 26 days. So it's quite exciting times. Markets are still operating over here. You can see prices starting to break above some kind of 43.82. It's trying to continue moving upwards. The daily is still bullish here. Hey, good morning, Ricardo. See who's in the chat. Good morning, Mohammed. Good morning, Jane. Good morning, Kaveja. Babu, FX, Fred, Momar, Franks. Welcome, welcome. All right, so let's see. What do we have in store for us today? I think today we don't have anything really in terms of fundamentals. Fundamental-wise, we got, that's why the Swiss franc, a bank holiday over here. So we don't have anything really to look out for. Price is moving. People are still waking up from all the food that they had on Happy New Year's or the hangovers from the New Year's. It's a second over here, everybody. So hopefully you're at 100% now. And, you know, markets have been moving incredibly throughout the holiday season. And, yeah, right now we are still moving, it seems. The daily candlestick opened here without a bottom wick. And just skyrocketed up like 590 pips. Top 1.30-40%. And it's got a lot of range. Remember, this is the same range we spoke about. That's the range that's to be getting filled over here. So we did see profit taking that came in from last week. Monday, massive candlestick. We haven't seen a candle that big again since 21st of October. And now it's giving a pretty good opportunity for a range fill, right? If you look at the 4-hour is currently at a resistance. And if we can break above that resistance, then, you know, on the HTF, at least on the 4-hour, we have a clean range, about 1,000 pips to the upside there, towards like 4,500. So that's going to be the next psychological mark over here that you want to keep your eyes on. Is going to be 4,500. 4,400 is really just that resistance point that we're currently up, lining up with that 4-hour point, as you can see right over here. But that's about it. I think 4,400, 4,500 are the key marks. Below that, maybe 4,300 that we respected, where we had a little fake out below that zone. So notice that little fakey. Boom. Created a nice little inversion over here. Inverted head and shoulders for price to move bullish. Nice little SMA confluence. Now we're at this high. Right, so we're just getting our bearings in the market right now, just to get an idea of what's currently going on and what to be expected moving forward. So yeah, those are the key marks. So let's wait and see how price does above 4,400. Maybe this could be a zone it could break now. It could break it later. We don't know, but it's a key zone indeed. I got a lot of like supply over here on the left hand side too. But right now it is accumulating right next to that zone with the intention to break above that area. Yeah, the intention to break above that zone. So if you go on the 5-minute, you can see it a bit more clear. Boom, boom, volume, distribution. So it's currently in a distribution phase right now with some little SMA confluence on the 5. It's, you know, it's looking at this HTF level over here. It's looking at this, his buddy over here, and it's thinking, how can we get through this block? You know, how can we get through this block over here? The big block, Big block. So we gotta get some reinforcements, correct? We gotta load up. See, this is a market here loading up. Loading up, and now it's going to go for the insertion over here to see if it can get through that zone. So it's got its orders, it's got its volume, it's got its structure. So you got structure, you got volume. We're up plus 1.48% on the daily. So now we got the bulls making an attempt at this rally over here. And it's right now we just got the London open. You can see on the kill zones, just got the London session open. You see how that lines up as well? And you're gonna wonder to yourself, why would price do this to start doing this during London time? You know why? There's a high volume time right here with that London open. You can see how it's preempting that. It's already looking into the future. That's the thing. That's the beauty about candlesticks. You don't really need any sort of like book maps or pointer controls. Like, you just need to understand time and structure, right? Because throughout the day we always get the same repetitive actions, and they usually come at a pretty high confluence time in the market. You know, like if you think about capitalism, the Western world is built off time. Everything is built off time. That's why when you're in Western countries, everyone's on time, right? We follow a clock. We follow a linear way of doing things. In third world countries, time is not as followed as in Western countries. But you know, in capitalism, created by Western countries, time is everything. Time is money, as they say. So we can see that reflection in the market here beautifully. Such a simple concept. Overcomplicated because you want to be all high tech about things. But these things, you know, old is gold. And these concepts have been testing the time. They've been around here for, you know, very, very long time. So I think like once you understand that, once you really start digging into the simplicity, not just only in the charts, but overall surroundings about how our society is structured, and then reflect that back on the market, you start to understand things from a little bit of a more simplified way. But it does take some time to get to that level, I admit, because, you know, there's a lot of sophistication and simplicity as well. Right? That's why you got companies like Apple, they started off complicated, and, you know, as they're going, they're getting more simple and more efficient. So it's just something to keep at the back of the head. It's more of like a vision, right? It's a vision you're working towards. But in the beginning, you gotta have to have a lot of clutter. You gotta have to have a lot of knowledge to start seeing what to take off and what to leave, so you can have like the most efficient product. Hey, Nani knows. Hello, hello. What do you know about markets today, Nani? You got a German 40 trade? Good morning. German 40, first trade of the year. Let's see. Godspeed. I see that little liquidity grab right there. A little consolidation. I'm not sure what time frame that is, but yeah, I got a little accumulation. Got a little fakey situation down here. I see you got some SMAs, some interesting looking SMAs over here. Dotted line. Can you actually change the SMA colors? Or what is that? Probably an indicator. I don't think. Can you change? Oh yeah, you can. Let's see. What can you do? Oh, nice. Step line. Histogram. Cross. Oh, that kind of looks cool. I'll just keep it on the line. Straight to the point. So yeah, as you can see, price coming up towards that resistance point now, and it's just gonna be trying to like break through that. I think that's gonna be the main goal for today for the buyers, is to get through 4,400. The crazy thing is, like, price is already up 1.40%, right? It's already quite a lot, 1.40%, but we've seen gold do about 2%. I'm not sure if we can hold 4,400 today. Maybe we can like test it and then continue with it on Monday next week. Feels like a tall order, but you know, gold is full of surprises. We could just have 1,000 or 2,000 pip candlestick on the daily just pop out of nowhere over here. But I feel like this range, oh man, this is such a good range that with Trump's inauguration of the, the first, the next Fed chair, this trade is gonna get mopped up. So I don't know if it's gonna like clean it up before then. That's quite interesting to see if people are gonna get that exuberance in before we get that new chair, because we all know who Trump is. Trump is gonna put someone in that he can have some rate cuts, right? We already know this. So the thing is, like, if market prices increase, institutions may be forced to buy, and that's gonna push price beyond certain points like 44, 45, 60 before we get the new guy in. So that's a possibility. But if there's not much exuberance, then we're gonna hold this. Maybe we even get like artificial hold, but we'll see before he gets put in, and then we'll see that continuation. All right, we'll see that continuation, and then we'll build some new structure before the FOMC event towards the end of the year. We'll have something new. This is too small, I guess, for us to play until FOMC, when we still have fundamentals coming out. We also got the NFP, the non-farm payrolls. Got a bunch of red folders. It's a new year, new month. Remember, drink water, chat. Stay hydrated. Day 1, W, 29 pips, 2026 locked in. That's what I'd like to hear, Yasin. Let's go. Let's go, let's go. What's up, Rainsy? How was your holidays, everybody? How was your Christmas? How was your New Year's? Enjoy the fireworks? Everything all right? Apparently, there was a ski resort in Switzerland which caught fire during those fireworks. And we got like, what, 40 people? What is like 40 people dead, or like 40 people were like severely injured by this? Yeah, but fireworks are pretty cool. I don't really watch. Typically, I would watch what's happening in London, New York. I watched a bit of New York. Australia, Sydney also have like, I think it's in Sydney, right? Sydney, they got like amazing fireworks there too. Why is that FXCM chart? FXCM is dead today. This is Oanda. You're not trading till Monday? Dubai had crazy fireworks. I wish TradingView gave us a I think it was like last year they gave us a firework tool that we could like put fireworks on the screen. They didn't give it to us this year. They only had like some kind of snow and animation on TradingView on the phone for like a few seconds. See, gold rises to kickstart the year. This is posted 6 hours ago. Gold rose to around 43.40 per ounce on the first trading day of 2026, extending its strongest annual performance in more than 4 decades. The metal gained about 65% last year, with a rally accelerating from late April after the US administration introduced sweeping global tariffs. The advance has been supported by persistent geopolitical uncertainty, expectations of lower US borrowing costs, sustained central bank buying, and renewed inflows into gold-backed exchange-traded funds. Meanwhile, minutes from the Federal Reserve's December meeting released earlier this week showed growing openness among policymakers to easing monetary policy. That's what we like to hear. If inflation continues to cool, although officials remain divided over the timing and scale of potential rate cuts, which is most likely always going to be 25 basis point. But the timing, we'll see. If we actually get rate cut in the first in the first quarter. And that's Trump's doing right there. That's Trump's doing right there. Because if it wasn't for Trump, we would not get it in the first quarter. Geopolitical tensions also remained in focus as the US stepped up enforcements against Venezuelan oil trade, while renewed Russia-Ukraine strikes over the New Year period targeted Black Sea ports and key energy infrastructure. All right, so we got some renewed Russia-Ukraine strikes over the New Year period, which is, you know, sad to hear, but it's good for gold. Targeted Black Sea ports and key energy infrastructure. So yeah, we got a lot to look out for 2026. Actually, there's a lot of anticipation here. I think it's gonna be a really good year. How many more years does Trump have in office? When is the next US election? That's in 2026. Oh, what? US election? Really? Yo, chat. US election is... What is it? Election is scheduled to be held in the United States in large part November 3rd, 2026. In this US midterm election scheduled... Oh, nice. The next president and vice president of the United States will be November 5th. That was 2024. When is the president election scheduled in the United States? November 7th, 2028. What is this midterm? Yeah, what is that midterm thing? I'm not sure, but yeah, you say what? 3 more years? Right, like 2028. November 7th, 2028 is the next election. The United States will hold its 61st presidential election November 7th, 2028. But we got a... Alright, cool. Maybe this is gonna also give us, or most likely it is gonna give us volume. So, I don't know why it's saying here March. Because I thought March. And here it says November. But anyway, we'll cross that bridge when we get there. It's not really important right now. What's the most important is what's currently happening this month, or what are we expecting for price to happen this month. That stuff's gonna come later. Right now the main focus here is the Federal Reserve, the new Federal Reserve chair, the FOMC, the rate decisions, and this geopolitical tensions that we currently have on the table. We gotta look at the food that we have on the table. We can't be looking at the next table. We gotta focus on our table. Presidential election. Let's see. Jewish Powell will make gold up. Hey, tall trader. Good morning. Happy New Year. Happy New Year. Gold rises amid geopolitical risks. Gold rises in early Asia trade. Tensions between Saudi Arabia and the United Arab Emirates flared this week when the kingdom warned its Gulf rival against endangering its security and said it would take all necessary measures to counter the threat. In the Middle East, the situation remains fragile with the risks of escalation still present. See, geopolitical risks continue to provide strong safe haven demand, underpinning the precious metal, the CEO and assets manager adds. Yeah, this is all looking pretty solid for gold, to be honest, Chad. Like, even the fact that we opened up here on the first trading day of 2026 with no bottom wick and just skyrocketed, that means we haven't even created the yearly lows. Also, something to consider. There's no yearly bottom wick which is formed. Would have been nice if we created a yearly bottom wick, or like even a quarterly, like the quarterly bottom wick. You know, that kind of looks dangerous. That looks really dangerous, because can we actually have let's see if we can go on a yearly time frame. Let's see, can we actually have a year basically no bottom wick? We got 25 candle, at least created like this little baby bottom wick here. About like 100 pips. Can you get like a year open with no bottom wick? I mean, it's not an impossibility. Look at this year. This was in 2006. That was the last time we got a yearly candle just skyrocket up like that. Look at that, and just shot up. So it can happen. Last time was 2006. Maybe we're due for one now. Been a while. We'll see. You know, it's still quite early over here. But it is kind of concerning. But we'll see. We'll see. Got plenty of time. Maybe the next daily candle comes and creates that bottom wick, and then that becomes like a choppy area of sorts before price starts to move in that direction to the upside. So that's a possibility too. Just keep an eye on that. But right now it does look good to move up. That inverted head and shoulders and everything else. Clean range on the HTF. Looks solid. Day one, first 54 pips TP. Go. Where's everybody? Where is everybody? How to gold move. Oh, you took it in the range. All right. You see, at least you're on the right side of the market, correct? You're still going with the trend. Still moving up. So you're going to still have a higher chance to get a buy. Play out. You can like get away small. Like this is basically the range I traded this morning. Right over here, from here to here. That range got mopped up. So it's within like some good structure, some clean PA. This is not very clean PA. So you're better off just going with the overall direction of the market. Awesome. CBE to start the year, missed TP by 5 pips. Oh no, you got stuck in that range. Yeah, but let's see. He came in when you were getting stopped out at BE, which is actually a good thing. That no, actually, you would have survived that trade. You would have survived this if you left your position open, but that's when Rainsy got in here. But it's coming down to take you out. You see, it's like the market doesn't really like the market just moves, correct? It's funny because you're getting in now here when you're getting in getting out of BE. So it's always important to keep that open-mindedness about markets, you know, not to assume that it moves just stringently off just one thing. But it's good that you followed your rules though. Definitely very good for following your rules. Because everybody has their own probability, right? If you got a different strategy, you got a different probability of that specific zone becoming like for you a winning or a losing trade. But you just have to stick with the system. You know, I think as you go into this year, what would be the best thing to focus on is maybe like 2 setups, right? Focus on 2 setups maximum. Like that's typically what I like to do. Every now and then I'll get the odd third setup, but for the most part, like two setups. 2 setups. Just lock in on 2 setups. Now you see, not out of like your feeling of oh you want to trade it, but 2 setups that make sense with what the market is currently doing. Market's currently providing. And then really like look at that setup and say, how flexible is this setup? You know, how durable is this setup over here to last? Because, you know, some setups only work good during market trending conditions, right? So you have to preempt when the next speed bump is going to be. And, you know, like, depending on what you're trading, that duration of when that next speed bump is going to be, it could be weeks for some people, especially if you're solely basing on a higher time frame and trends. So look at the durability of what you are planning on taking into the year and see how flexible that is. Even if you need to do some kind of adjustment, can you adjust to what the market can throw to you? Ranging conditions, trading condition, trending conditions, big stops, small stops, can that be adjusted? Is it flexible enough? If we pour water into the cup, can it become the cup? Or are we pouring something else into the cup? The nice thing, I'm journaling the trade since it goes so slow. Oh, you're journaling as it's moving. Very good. Very good. Monday I got school, at least 1 trade a day. Yeah, one trade a day. I got my buddy used to trade in class. Before I knew what trading was, we would like have these seminars. He's the guy who introduced me to trading, and he used to trade in class. And I would be like, what is this guy doing over there? Look at his phone. It looks all weird and complicated. It's like he was trading gold at that time during class. I used to always sign him in, you know. He used to say, hey Vic, can you sign me in? He signed me in. I always used to sign that guy in. Sign him into class. But he was still a top-notch student though. It's just like he was making money trading. He made money. Actually, that guy was quite a hustler because he made money. I remember that time trading and teaching English online. Apparently, you can make a lot of money teaching English online, right? But this guy was the guy who introduced me to trading, and he was the same guy. So like drive a really nice car, and we're from the same country, and we're both foreigners in a new country. I'm like, damn, how can you afford to buy this car? Like me and you come from the same place. I understand your background. You're not a very wealthy person either. So how are you affording all of these nice things? And he's like, oh yeah, he's a trader. He does trading mostly. I'm like, okay, interesting. And then I never visited that idea until maybe about a year later or so. Then when like COVID happened and everybody was just sitting at home, like, okay, can make some money here. Then that's how it started. That's how it's out. But I think it's always nice to know somebody, right? It's always good to know somebody in the real world who actually does what you want to do. So you at least have some sort of like a bearing about it. Because a lot of people find it difficult to believe as well if you don't have anybody actually doing it. Then all you got to go off based off is just the internet. But you see, I had the experience, so that kept me motivated. I'm like, man, if this guy can do it and I know this guy, come on. You know, come on now. But that's what I want for everybody as well. I want everyone to know if I can do it, then you can do it. Because I'm just like pretty much anybody who's just going to start for the first time. Ending with BE, but no regret. Even it did floating profit around 35 pips. Also, I almost got stopped out early. I'm satisfied with trade management. Nice. Take a buy. Stop loss to BE. Oh, yeah. I mean, that part was kind of tricky because it chopped for a bit before it actually moved up. But I think overall it's doing quite well. It just needs to get through that 4-hour resistance over there. But it's heading towards 4,400. That's going to be the target. You know TikTok from a TikTok video. I'm on phase 1. Got 3 payouts in 3 months. Congratulations. W. Here we go, Goldie. Now Goldie's getting through that zone. Still distributing, mind you. Came back to chat. It came back to test this area. Remember, like we always speak about this. Came back to see if there's any more Ricardos here who want to get into the buys. So I came back, fetched some buys from Ricardo over here, and then continue to move up. See, that's like getting through the zone. It's the same thing that happened in my trade this morning too. It happens quite a lot. Like distribute, boom, boom, come back. This was a bit more aggressive though. It was going for like to take out the highs. I was going towards like taking out the highs as well, like small liquidity grab. But it didn't do it too bad though. But it was definitely like targeting this candle specifically right over here. But I went back to check if there was any sellers over here because there's an accumulation that was happening. There was an accumulation break that was happening over here too. So I went back to retest that zone. Get some more orders in before it started pushing back down again. Am I good, Vic? Yeah, I mean, you're good. Very stop loss to break even. You got to run it here. Secure like 80%. Secure 80% and just let the rest of that position go. You know, then you got to be very stress-free in that trade. That's got to become a stress-free trade. It's already stress-free trade. That's also a pretty big move, to be fair. Don't be greedy. There's a lot of upside on gold today, but don't be greedy. Prepping to exit at 90. Don't be greedy. It's going towards 4,400. Break 4,400. Off to the races. This is already on. This is in distribution. Maybe there'll be some continuations on the 1 minute, such as these right over here. So what you're seeing is a higher time frame distribution. This is all happening on the 5 minute, right over there, and price is distributed to the upside. What you're seeing here is a minor continuation entry model, right here, which is pretty much the same thing here, scaled out on the 5 minute. You go on the 5 minute, then you're gonna see it like this. And if you go on to, see, you won't see it now, not on the 1 minute. This just looks like a pullback, correct? But you see that, you see how that looks, and then just go on the 1 minute, and then boom. It's like, it's the same thing, but you gotta be, I think the thing about trading is, it has a lot to do with also like your ability to be creative, you know, because if you have a very scientific mind, sometimes that kind of actually blocks your creativity. It arguably can block your creativity, you know. So I think you're gonna see it or you're not gonna see it. Trading is actually just one of those things where it's like you're either gonna see it or you're not gonna see it. So the more you practice like a certain mode of analysis and approaching markets, you know, the better that you get at doing it. Just like anything else. The more you do a certain specific art style. I remember in school we used to do like stuff like what was it called? Pointillism, where you'd like paint a picture using like a pencil and then you like point. It's called pointillism. I mean, the more you do it, the better you get at it. But in the beginning, obviously, it's gonna be shit. Then you get better at it. And you just see it a lot better. Hey, good morning, Ragnar. Nice to see you in the comments and on the live chat. 10 ticks move and it's done. Yeah, it's blasting through this area here. Hey, what's up, Mark? Hello, good morning. Happy New Year. Which broker do you recommend for trading with up to $500? Yeah, that's open to the chat. Chat can recommend. Not sure it went smooth into 4,400 or surprise us in another way. It's getting there. It's inching closer and closer. There's no reason to think that it should sell off right now. 4,400 is about 120 pips away. It's just distributing from this secondary entry right over here. You can even see how that volume came in initially at the break of that high to move bullish. Look at what I did right now here, chat. Do you see the predictive patterns? It came back to check out if Ricardo is still down for some more buys. So it came back, checking it out, and then getting a little bit of a reaction. So this is not as deep as we would like to see typically, but at the same time, it gives entry models here a chance to survive any break-evens. Maybe there's just a lot of buying pressure, so it didn't come in too deep. Yeah, but it's like the same thing we just spoke about that happened literally like right here. Right here, that break. Dun. So, you know, the whole idea with TFX concepts is just to make the spaghetti look a little bit more understandable, right? A little bit more, because you gotta also understand like these are all tied in together, right? You got the higher time frames, daily, 4 hour, they're all tied in together. Yeah, you're gonna use them as well. But at the same time, the most important thing is what's currently also happening in the market. So you're gonna take this concept which happens repetitively and then apply it onto what the market is currently doing, with the perspective of market still operating outside of that too. It sounds weird, paradoxical, but it's just the way it is. You know, you just have different time frames. But when you're looking for execution, price action, where you see like, nah, it's giving these buyers here a bit of a hard time, so it's gonna get a bit sketchy for them if price starts to really come down. But yeah, you gotta look and see what the market is currently doing right now. That's a reading price action. That's how you capture your trades, because you're always gonna get like maybe a liquidity grab or something that's gonna stand out with a PA that you can use as confluence for a certain position. But yeah, I think like the more you're gonna anticipate, and the key word here is anticipate, the better your trading is going to become. So look at your ability to anticipate. How good is your ability at anticipation at this moment? You know, like, do you find yourself anticipating correctly or incorrectly, or do you finding a lot of like surprises happening in the market? You're getting a lot of surprises. What does that mean if you're getting a lot of surprises? Does it mean that you're still learning because there's still a lot to learn? Or does it mean that you don't have good anticipation? You know, it could be either one of those things. And how are you going to know this? You're going to know this by putting in the work and like sticking with it long enough to know this. Whatever it is that you're anticipating, to know if you can actually anticipate it or if it's just going to be surprises, full of surprises. Because you're going to get sometimes stuck in a loop of like forever learning. And that loop means that now you don't have a system that's good at anticipating. So you're constantly learning, which is good to some point. But if you find yourself constantly learning, then it's a loop that you need to kind of jump out of, because that means that your system is either you're not sticking to it long enough, or yeah, most likely you're just not sticking it to long enough, or it's just not a good system, I would say. If you have to constantly change something. But that's the process. That's what everybody's kind of gotta have to go through. There's no shortcut about that, but there is ways that you can reduce the learning curve, just at least by finding a proven system and sticking with that proven system, which has already been proven. You don't have to reinvent the wheel. Nothing that I'm doing here is new. It's just what I've seen the markets do over and over again. So as long as you're not trying to reinvent the wheel, then I think you should be solid. Because a lot of the time we kind of want to reinvent the wheel, right? When we first start trading, I used to have like this whole checkbox. I used to do like whole freaking checkbox of a lot of things, trying to reinvent the wheel, and thinking that, you know, the worst part is when you think you can actually reinvent the wheel. Because, you know, the market's going to give you a lot of things such as indicators to play with, MACD, stochastics, Bollinger Bands, and it feels like you have some kind of reinvention going on at the moment you're doing that and creating a checklist. But the truth is, you're just overcomplicating. And it took me a while to really understand that you cannot reinvent that wheel. Still learning, sucky anticipation. What I used to do to help my anticipation was this. This I think is going to help you a lot. You can go on publish. So whenever you publish an idea, so I would typically have something of the sort like this. Let's say if I thought like price was going to sell off, I would do something like this. Then I would go on, I think it was a forecast. Yeah, I'll go on forecast and I'll do something like this. Then I'll check also with the time, because this is like time. What time do you think it's going to come towards like this area over here? If you think it's going to sell off from 43.89 down towards this level, then you can do that with the timing too. Then you're going to put your position, say if you wanted to sell. And then anyway, when you get all that noted like such, then you can go over here on publish at the top right hand side and say something like gold sell. All right, then walk us through what you're seeing, why it matters, and what you expect. So it's like journaling on TradingView, right? Then you write whatever you think it is, and you hit continue. Then later on, you're going to be able to review that and then see what's going on with your, it kind of gives you an idea of why maybe some trades don't play out. Like for example, if this one had failed, you might quickly realize the reason it failed was because price was moving up when you're looking to take a sell over here. And then when you hit play on your published idea, it's going to play it out. And then you're going to keep doing that. And then you're going to see like if it's going in your direction or how are the candles behaving. Like when you take your trades. That's what I used to do. I didn't do it on this account. Unfortunately, I can't remember the account. I wish I could share with you guys, but maybe I just need to really look for it. But there's an account that I have with so many ideas like that. And you're going to see the chart work was crazy. It had like so many levels, so many different colors, higher time frame zone, lower time frame zones, just over analyzing. Yeah, but that's a process, you know. That's what you gotta go through. Because it's harder like when you don't see it, right? Like when you just take a trade like right now and then it happens and disappears, then it's harder to get a gauge on this. Remember, like data. That's what we need. And the more we can visually see that data, the better it is going to be for like learning purposes, you know. More than 5,000 backtests with a 70% win rate for over 8 months. Let's go. Last year I got a new job, so 80% of the energy was learning the new job. Now back in 2026, back to focus, just like the first quarter. Last year was 30% up and 76% win rate. Awesome. Let's go, Xauusd. Yeah, I know you gotta learn your job. That's true. I understand it. Gotta learn your job. You gotta learn just enough to not get fired. Just do just a good enough job. Well, that's what I used to do. Now look at this. 4 hour here is getting broken above. Started to break. We're heading towards 4,400. Told you this is like a magnet right here. Still distributing from this area. This zone, that was a secondary entry for price to move up. Still distributing. Shooting. Let's run, Goldie. Why are you running? Yeah, this is crazy. This is crazy. Gold. Let's see, close out 1-to-1. Boom. Was there a small? This looks like a mini break here. What are we on? Oh, that's a 5 minute. I'm on the 5 minute. Was there another one? Oh, there was another cheeky one over there, huh? It's a very tricky one, that's for sure. Because it's not as clean as it could be. But you know, it's created like some kind of a structure here. You can see right next to your entry as well. That's a kind of like scaling approach that we typically talk about. It could be definitely a lot more cleaner, especially if that support came down a bit lower for that break. But it did create some kind of a structure. You to break the highs with that. Even the 8 SMA was still holding quite nice, and now it's still distributing upwards. It's pushing past a 4 hour, up 1.70%. This candle here, it's freaking 42 pips. That's actually wild. 42 pip 1 minute. Right next to 4,400. You can see like a little bit of manipulation that happened here earlier on too. Break of the highs, and then it came back down to mop up these zones. Look at that psychology of how the market came up, took out the highs, triggered in the buyers, came down to take them out. Very intentionally. You know, the market is very intentional about the things that it does. Super intentional. Look at this. Came right here just to wipe this area out over here, because that was a confluence area at the break of the highs. Then it came back down, created a secondary entry that happened like literally right over here with that break of volume, with that little SMA crossover too. You got the mouth facing upwards, a bit of clean range in the middle. Starts breaking the highs. Boom. Distributed nicely. Came back to retest Ricardo entry over here because, you know, market can't leave Ricardo in profit forever. So has to come and balance him out. And maybe also get in some new players. Maybe Luke wants to get back in over here. So then they're going to get back in, and then you're going to have that continuation, and the model repeats itself. You got it like right here as well. A little small entry, clean range, break of the highs. Beautiful push. And the good thing is, like, man, when you get the direction right, and usually it shouldn't break the lows if it doesn't want to move down. It will always just break the highs. If it's just going to be moving up. Beautiful. Beautiful, beautiful, beautiful. Like, you got it right here too. Another shoot up to the upside. So for new students, you don't know what I'm talking about. But for those of you who've been like following for a while, and I think you kind of already have a bit of your eyes adjusted to what it is that we're explaining here. Yeah, and the daily bias is definitely bullish. So still pushing onwards. Onwards and upwards. Told you no reason to take a sell over here. What was the most reason to improve or with a thing in the strategy and compared to the first quarter last year? I think you're just anticipating like volume, because like in the beginning of last year, we didn't know there's going to be so much like volume in the market, because in 2024, like gold candles on the 5-minute were giving us like, you know, 10 pips. Right? Like we're pretty humble on these trades. We're pretty humble, you know, like plus 9.8 pips. You see 8.2 pips over here. 6.6 pips. Like we're pretty humble. So we did not know that 2025 was going to be like gold's biggest year since the 1980s. 1979 or something like that, you know? We didn't know that. So when the volume started to come in, we had to grab a different surfboard. You know, we had to grab a different surfboard and say, okay, you know, we got to adjust our perspective here a bit to what's possible and then take advantage of that. So right now, it's like the similar thing. We're still getting the same vibe from 2026. So that's still not yet slowed down. There's still a bunch of volume in here for sure. Yeah, it's still performing quite well. Can't complain. I think it's just the important thing is just to remain consistent throughout the year. To stay humble and to stay cautious about any switches. And the main giveaway is gonna be the macro fundamentals. That's kind of what's gonna give us a hint of what to expect. But right now, moving forward, it seems like things should be good. At least for the first month, we should expect like some kind of decent volume. And then we'll get the first FOMC rate decision, and then from that point onwards, I think gold will recalibrate accordingly. Because right now we got like the federal chairs, like the FOMC is saying 50. Oh, no change. Yeah, no change at 80%, 85%. But you see, these numbers can switch. We'll switch. So keep an eye on this. By the end of next week, I think we're going to be seeing different numbers here. I believe the easing should go up by the end of next week. When Trump puts a new guy in, I think that should go up right there. Because we all know that, we all know, you know, like we all know. It's like in a group. It's like in a group of people, like, you know, that trader psychology, especially with someone like Trump who you can read so well. We kind of know. We know what's cooking right now. What your average winning pips for last year? Average winning pips last year, I would say like maybe 15, 20 pips, 15, 20 pips. The runners were... Oh, but those are point where like hitting 30 pips. I would say average, let's just say 20 pips. Let's just say 20 pips. Because, you know, it's not every day you leave a runner. Yeah, that's what I would say. For most people anyway, I think you're going to start to see reactions from like 18 pips roughly around this mark. Like 16 to 18 pips. You're going to start seeing some kind of reactions. So most people, like the way we trade, we're going to see like roughly around like 20 pips. Not only me, but you'll see all other streamers you watch as well. They're probably like also hitting around maybe like 20. 20 pips. Man, at some point we're getting like 30 pips easy. 30 was a new 20. And then that started slowing down a bit because retests. Getting retests before the 30 would hit. But yeah, the way the market's operated, it doesn't matter what system you're trading, TFX concepts or whatever it is, you're gonna see by the time we start approaching like around 18, the market is super intelligent. Like, don't underestimate the market. Right? Don't think you're gonna outsmart the market. Super intelligent. By the time you get around like 18, 20 pips, you're gonna see reactions. So now your question is, how can you trade that? And on the times that it does keep going, right? Like, how many pips does it keep going? So you got like 25 here and then retested. And you see when it keeps going, it's beautiful. Let's keep going here for about like 80 pips. 80 pips. This one also just kept going. That kept flying. You also got to see with your strategy, like, can it actually keep flying too? You know, can it keep flying? Let's see what that reaction was here. That was about like 14.6 before it pulled down. Yeah, but I think like with our system over here, it can keep going longer than we think. Now, the question is just like, how good is the chance that you get a runner from that position? Like, how good is the range that you can secure a runner? You know, like, where can price move from here to here that it makes sense for you to hold a position for, you know, a little bit longer? So every trade is going to be slightly different. Like in this scenario, we had loads of volume. We got pullbacks, break of support, clean range to give us that probability of a potential runner trade. See, this was also a buy that we took here. That's a shotgun play. Look at this clean range up towards that next resistance point. What's the problem? This thing like barely even pulled back. Such a beautiful range towards that high, and then that came and it mopped the whole area up like this. You know what I mean? So it's just like, you got to look at that from a trade to trade perspective. But I think for me, not being greedy in the market, I would say like focus around maybe to secure 16 to 20 pips is a good way to at least leave the day with something. And every now and then, obviously, you're gonna have your running trades, 30 pips, 40 pips, you know, but that's gonna come based off of like how clean structure is and how good you think your position is worth to be a running trade. And you get better at doing it. You know, the more you do it, the better you get naturally at that whole thing. You know, like these are two separate trades, for example. You get sell over here, a little bit of a pullback, and then price continue to melt. Secondary trade, another sell idea, boom, price just melted. It's just a matter of like seeing it happen over and over again. You see, like, look at this, for example. Boom, look at that. Look at how it just completely melted here, just completely nutted. Right? So once you know that this is possible, that price can actually do this, you're gonna feel a lot more confident about certain scenarios. Especially like, let's say if you get like a 3 losing streak, right? You get a 3 losing streak and you know your trades can run. Like, look at this. This little retest over there and then just completely skyrocketed. You're not going to be so worried about that because you know that that next running trade, given the probabilities of the market conditions, is just literally around the corner. Even if you're going to hit like some choppiness, you know, if you just keep applying, that bomber clot is around the corner. So it's all a matter of like, how often does that bomber clot actually happen for you? You know, then you're not going to get too discouraged about like, you know, 3 losing streak, maybe 4 losing streak, because it's easier to make it back in that perspective. Next bomber clot just around the corner. See this now, it's like been pulled here by 4400. You see how it like just got pulled up towards like 4400. It's like a magnet, right? Got pretty close to tapping into it, like about 20 pips away. But it's also a little psychological trick because people try and hold towards 4400, then they start to see the pullback shortly before it hits 4400. Then they start to panic and maybe start to think they should close some positions. But definitely some psychology work happens when price is about to hit a target and then starts to pull back. And that could happen with a TP. It could happen as a psychological mark as well. Could happen with a zone 2, support resistance. You'll see it happen to you. It's coming. It's coming. If you're still new in the game, maybe you've been training for like 1 or 2 months. There's a lot of things which I can call out which are coming for sure. It's coming your way, sir. Things that we all have to experience. TP is almost getting hit. Boom. Break even. Or like something of the sort. but have to come a negative risk to reward is easier. Is it a little hard to get a good opportunity? Now, most of my trades are like 1-to-1 plus. The thing that I play around with is not the risk reward. Risk reward is a bit elementary. If like that's how I would look at risk reward. It's a bit elementary. What you want to look at is your percentage risk per trade and then managing your risk. That's a little bit more of a sophisticated way of trading. Risk reward is just, it's just easier for people to understand. Like if you lose one and make two, you can lose 50% of the time and still be profitable. It's just like a layman's way of explaining markets, you know, like just in terms of a very simplified approach to markets. But what you want to focus on is managing your risk and controlling your percentage gains, because you can have a 1-to-1 and still make like 2%, or you can have a 1-to-1 and still lose like 0.5 or 1%, right? It just comes down to how you control your risk, and you don't always have to risk the same all the time. If the market condition is not looking as favorable, you can reduce that 2% and make that a 1.5 or 1-to-1%. But it gives you more flexibility and a little bit more maturity than always looking for like a 1-to-2 or 1-to-3, because the market doesn't necessarily move based off risk to reward. It moves based off risk. That's why you're gonna see sometimes the market will give you a warning sign. Let's say you take a buy and then it starts to like consolidate, it starts to hesitate, it plays your entry. Deep down inside, you know that this trade is gonna be a losing trade. Like you got that gut feeling because you've been here before. But you're gonna do nothing, right? You do nothing because you also just want to see how it plays out, because risk reward tells you that you should hold and then just wait for the market to play out. But deep down inside, you know that something is off of the position, but you do nothing. And it also gets tricky as well, because another pitfall you find yourself with risk reward is sometimes what happens when it goes like, let's say you're looking for that 1-to-2, yeah? Put yourself in a scenario now you're up a 1.5%. Mind you, you're just taking like 2 or 3 losses. You're up a 1.5% right now, full losses. And then price starts to retrace back down from that 1.5%. Now you like start putting yourself in this psychological space of like, damn, you know, I'm like in profit right now. I could secure this right now and then like make back some of those losses. You put yourself in a very like tricky predicament. So what are you going to do? You're going to stick with your system and let that thing play out to 1-to-2, or you're going to say 1.5, which could balance your risk. If you secure it now, potentially come back to break even, or even maybe a losing trade if you don't put it to break even. You see, you put yourself in a very psychologically draining mindset. Now, especially when you have a law on the table, when you're trying to do a funding challenge, when you're in a valuation phase, maybe you pass a valuation and you're in a bit of a predicament. These things are waiting for you up ahead. So you have to preempt all of this now if you're using risk to reward. You have to be okay with even seeing a almost a 1.2, literally like few pips to 1.2. Is like 1.9. Even a 1.9 can come back and hit your stop loss. Close to about like 1-to-2. So I would say if you're gonna use risk to reward, definitely like you put like a game plan on it to say what are you gonna do at a 1-to-1. You know, for example, you're going to secure, break even. What are you going to do at a 1-to-1.5? Are you going to secure maybe like 80%? Let the rest run. But you see, then again, it diminishes your risk reward theory if you secure 80% at a 1-to-1.5. Because by the time the 1-to-2 hits, it's not going to be really a 1-to-2. So there's a lot to think about. You will still never get away from managing risk. You know, you see what I mean? It's going to start simple for you, but you will still never get away from wanting to understand like how to actually manage a position correctly. That will always be an issue that will come later. Then you start to realize, oh, maybe you know, if I'm going to do that anyway, maybe I can just focus on percentage gains and focusing on just keeping the risk low, increasing risk when I think it's a high probability, reducing risk when I think it's a low probability, and just going with the flow of markets and how consistent markets are. Yeah, now I focus on risk per trade, X power of the setup / volume, and how clean is that setup. Then managing trade and risk professional. Nice. Yeah, definitely that's gonna be quite a predicament. Quite the predicament that is. Very delicate situation. You know, trading, very delicate thing. Because those little changes, they can make a huge difference, you know, huge difference. Choosing to lose less, choosing to secure something, like just a small little tweak. Huge difference. UEC with no debt, with 698 million and products, has governments buying uranium. And businesses won't stop buying near support to start a move back to the upside. Bro's trading uranium. Hey Joshua, Happy New Year. Happy New Year. Another year around the sun, right? Yeah, fireworks pretty nice. You know, fireworks were actually borrowed from like the Chinese culture. They used to shoot out something like with bamboo, some bamboo type of fireworks to ward off evil spirits. Then we started like also using that too for celebrations. It's kind of nice. Little cleansing that goes on during the New Year's. Got some new traders in the market as well. This is about the same time that I started trading too. Really locking into markets. Anybody new to trading in the chat right now? Anybody like on their first month of trading? Let's see, tensions between Saudi Arabia, United Arab Emirates flared this week when the kingdom warned its Gulf rival against endangering its security and said it would take all necessary measures to counter the threat. In the Middle East, the situation remains fragile, with the risks of escalation still present. Oh god, Lexi here, first month. Welcome, Lexi. Lexi Fields. Fields is a UK name, right? That's your second name? British name, I think. British second name. Fields. Join the Discord channel and start posting charts. That's the number one best thing you're gonna... That's the best first thing for the new year for your trading career now that you're gonna do. Is join the Discord channel. Come on here to like chart rules. Learn how to operate Discord if you're new to Discord. And then start like, you know, labeling your charts. We got like a whole section here teaching you like, you know, how to label your charts. Why you think that's gonna be a good trade. Gotta label it like this. And then send it over to analysis or trades taken. Man, trust me, like you gotta make that one choice. That's one choice is gonna help you see things. You gotta bring yourself to the light. Last name from Texas. A 675 66775. Browser trades bull run 2026. Yes, sir. It's the stage has been set right now for the bull run. It's been set. We're just like below 4400, but this is it right here. This is all-time highs by 4552. Stage is set. We're ready to go. Small even liquidity grab. See below 4,300. Been taken out. Look how close it came to taking this wick, but it never took that wick out by like 42.71. So it's still being respected. Daily's engulfing. Pain range. Got a little SMA over there to get through psychological resistance. But I think we can get through that mark. This first weekly can't. Is it weekly? Oh yeah, because the week, it's a new year, but they still got the same week. Same weekly candle. It's gonna close bearish. Do like a small break and a retest off this zone here on the weekly as well. Retesting, also a reaction off our SMA. But I think gold closed on the year at 66%. We saw highs of like 70 plus, but I think we closed around 66. Because of the profit taking. Can we leave a 0.5 lot runner for 12 months? Yeah, good luck. Put your stop loss, you know what you're gonna do is you need you need an account that you don't pay commission on, because you gotta like leave it for the whole year, like swaps. Play like over the weekends, get swaps. Some accounts give you like positive swaps for holding over the weekend, but yeah, you gotta approach that a bit differently, I guess. Yeah, 0.05. You know, the daily still doesn't have the bottom wick, but you can still get away with it. We've seen yearly candles actually move, but that last one that did that was in 2006. That moved without creating a yearly bottom wick. Hello there. I saw the clip. I was hoping. Hey, what's up, Rainbow? I was hoping you do it. Yeah, you know, because that's something that we get asked. Like, I've noticed a lot on stream. You know, it happens quite often that situation surprisingly happens quite often, and I do understand it, because I too was in a relationship when I was a trader, and usually when you're a trader in a relationship, you know, traders are very stubborn. We're very stubborn people because we want to get rich fast, right? We kind of want to burn all the bridges while we get there. So sometimes with that, like, much testosterone, also, you know, men release so much more testosterone on a daily basis than a female. And, you know, there's a lot of like ego which comes into play as well. So it's definitely like understandable situation. And yeah, I mean, it can be toxic, but at the same time, you got to know like what it is that you want, correct? And how you your general outlook towards life is. You got to know yourself, basically, what kind of person you are. Because I think like a lot of these things are intrinsic. A lot of that entrepreneurial spirit, you're going to find you've been having that perspective for as long as you can remember. And it's not something that just came the other day. So you kind of know what you need, what you want. It's like Grant Cardone, you know. Grant Cardone had himself in the same situation with his wife. He said like, hey, if you don't support me in this, if I can't do this to my full extent, then this marriage is not going to last. You know, Grant Cardone is one of the biggest real estate moguls, right? He's really big on passive income and everything. But, you know, he knows himself. He knows himself to that extent. He even has a show where he starts from zero, and through zero, he tries and make a living, you know. He goes to places, he sleeps in a car, he goes applies for jobs, he tries to work these jobs. And I forgot what that show is called, but you should watch it, by Grant Cardone, you know. It like really paints a clear picture of the type of mental model like I think a lot of people would have when they're seeking entrepreneurship. Or like Elon Musk vibes. You know, there's no plan B. This is it. This is the only plan right here. This is plan A. I don't know how I'm gonna get there, through training or through whatever means possible, but I need to get there. And that all is kind of shifts. Like Elon started with PayPal and other things, and then all of a sudden he starts building rockets. But it's just like a character thing. You know, that's why I say in trading, you always get something for your pain. When you understand about the markets, how markets operate, even if you don't become a profitable trader, a day trader, You've already learned a skill which in its own right is opening so many more doors, and you just don't know which door that's just going to open, what opportunity that's going to bring about. You know, maybe you understand the market from a different perspective, not a day trader, but more of like a swing trader, taking like 1 or 2 positions a year based off like high confluence things that happen in the market. And because you understand the way the markets operate, you're going to fully put yourself in a position to take advantage of that. Because during COVID, people didn't know about markets. A lot of people didn't know anything about trading. It's a whole different experience when you have to start completely from zero. But if you started from zero and you've already experienced like maybe 2 market cycles, 3 market cycles, you're still not profitable, man, trust me, next time something like COVID comes around or something of the sort, you're going to be in a position to put yourself in a great position. Look at the guy from GME, right? The guy who got GameStop shares. Man, this guy knew about trading. He was not a profitable day trader, the guy for GME, Roaring Kitty, but he knew about due diligence. He knew about markets. So when that opportunity came around, he executed. Literally, that's all he had to do was just take that one trade, and we all know him for that one trade. He made like $20 million from that one trade, right? Put his life savings on that one trade. He was not a profitable day trader, but he's a legend. He just had that one position that, you know, right time, right place, boom. He'd been experimenting. I'm sure he already knew about markets 100% and how those work. You know what I mean? So that's why I mean, like with trading, you always get something for your pain. It's not even Warren Buffett. I always say this. Warren Buffett says if he can make 2 good decisions in a year, that's amazing for him. That's amazing for him because Warren Buffett deals a lot of money and a lot of due diligence. And Warren Buffett's exit. How clinical was that exit during when the stocks were crashing? How did he know this? You know? That's why we love this. We love this game because you don't always got to be right. You don't always got to be right. Like Mark Wahlberg says, you only got to be right that one time. Sometimes. I'm in a quick scalp down to 34.78. Oh, 34.78. Nice. Yeah, you know, price is still moving up here, but Godspeed. Just shy of 4,400 for price to skyrocket. Break above that zone. Keep moving up bullish. Gotta be right that just at one time. At what time you gotta be right? Let's wait. Like the next COVID, we're gonna be ready. Next COVID pandemic, we're gonna be ready. So like also oil hit negative. Can't believe like oil actually went down to negative. People made a lot of money on that. Next COVID, we're gonna be ready. Need something super obvious. You know when it's super obvious? That's when people make bank. Airplane crashes into a building in New York. Obvious sell. 9/11. Get COVID. There's like super obvious things. So you gotta see in this whole year, what is that super obvious thing? Because you know these other like black swan events are kind of harder to read, like Nvidia and VDA. A lot of people thought it was a game company. Some people already read into it and knew it was a technology company, like making chips and whatnot. But you'd also have to like be kind of locked into that. What else? Like even gold. Maybe gold you could have kind of read based off the volatility from Trump, just being Trump. Gold should be going up as a safe haven. But like there are these other events which the whole world is looking at, you know, like COVID or like major catastrophes that give you amazing opportunities, life-changing opportunities. But we don't know when and how frequent those come, so we'll see. Maybe a company is going to find the cure of cancer sometime soon. It's a bit of an experimental trade. I'm looking into the money flow index. I'm still holding at 70 pips. Do you think that's enough for me to close, or am I being reckless holding the trade? Yeah, I mean like 70 pips is quite a lot. 70 pips, it is for me, if you ask me personally, man, with a 16 pip stop loss, that I would typically have, risking like maybe 2% on the trade, like 70 pips would be already so much. So yeah, I would definitely have secured something there. Like even just generally speaking, 70 pip move is quite a good, that's a really good move. You'd be happy to secure, you know, something like 20 pips. This also depends on how you manage your risk. Because maybe your 70 pips is only giving you like 0.5%. You know, I don't know. There's so many moving parts, but 70 pips is already a very good push. Just be humble. You don't have to catch the whole move. You just need to catch like a small bit of it, like a move like this. Like a move like this. If you catch like a small bit of it, awesome. You don't have to catch the whole thing. It's kind of weird. With the Wanda, you have to add an extra figure. So it says like 1600 here, but it says like 160.0. You got FXCM is still offline. The need to take bigger moves comes from a lack of, to feel like, oh, is it? Let's see. Oh, nice. We are back. As back online. Thank you, Ricardo. Must be time zones. Ooh, nicely melting here. Nice little distribution. Nice little sell-off right here. So look, like with that entry, you said you're experimenting with the money flow index. See, money flow index is on the charts. This is the money flow index here. Reading the candlesticks, reading price. See how like price accumulated and started breaking the lows? That was your entry confirmation for the sell. Money flow index trying to get you early, but you know, it's also kind of looking ahead of reality. It's trying to anticipate a little too far ahead of reality even before the candlesticks are being printed. So maybe you like got it in here, it's like setting up. And then you see, then eventually it sets up, and then boom, you get your entry confirmation right here at the break of the lows. But you're already in the trade before the candlesticks print. So that's the thing I don't like about those types of indicators. They try too much to forecast the future, which is also like what we do, but at least we wait for the candles to first print. Then we use such things like confluence. We also got like small little liquidity grab situation that happened right there on the 5 minute that took out that high. Boom, and then broke the lows to distribute down. It's a counter trend move as well. Daily bias is still bullish, but you can see that in action. You can see at least the play, the structure, distribution, a little bit of a head and shoulders in there too. Here, and here, that helped that distribute to the downside. Nice little estimate confluence, crossover. But the main thing I'm looking at here anyway is gonna be the candlesticks. Like if you just pull everything off away, like how are the candlesticks here printing? You know, what is it that you tend to see happen in the market? A lot of people made fun of like head and shoulders pattern because they try and trade it before without any confirmations. I'll just take it and then assume that's going to be the right shoulder. That usually leads to a lot of losses. But it's just used as a kind of like a confluence, as a volume indication. Over here, you see, boom. That entry confirmation, break of the lows. Then you got your liquidity grab on the 5 minute right there, taking out the highs. Then you got the other things. You got your SMAs in there too now. Now it's hitting 4,400. Buyers and sellers make money in the market. Like this push here has done around on that break, it's just done about like 40 pips. And we're just right here by 4,400. Very shy of 4,400, that is. Very close to it. Sure, think of holding since last night. Dude, like that's the thing. People are like buying gold and holding throughout the Asia. This is like, you can't hold this. This was a market open gap of sorts. You can't trade during this time. But this is what people have been anticipating. A lot of what we've been seeing and talking about is like these moves towards the last quarter of the year of 2025. This has been happening throughout the Asia. Like all the time we get throughout the Asia moves. People getting stuck in like early sessions. If that's going to be for buys or sells. But that's crazy. Like how a candlestick just open up like that. Then fly. Mind you, like that's a 1 minute candle. Would have like 570 pips in 1 minute. Crazy. Crazy volume. I bought before Asia opened last year. Nice. That's probably what people did, right? Got no bottom wick even. But you know, the spread is high. When you get the profit, the spread is quite big as well, but it fizzles out until the Tokyo Sydney Open, then you're good. It fizzled out and even just kept moving up. Oh, what's your opinion about opening gap for gold? Don't think it will go down to fill it. I think we're gonna when we come down towards support here, then we can start talking about that range that we got on gold to fill this gap over here. Because yeah, it is an area where the market will be interested. The problem with this situations like this is, you see, this is so big, it's so obvious. When it's really big and obvious, it doesn't like it has a higher chance of testing liquidity and pulling up as it continues to go down. So it'll be really about like avoiding those pullbacks. Because a lot of people are gonna have the same idea. That's why I personally like these little discrete type of ranges to trade in between. Like just small little discrete areas such as these. You see that? A little bit more discrete. The other ones, and it's the same concept. Like you can even imagine that this is a market open gap right over here on that 1 minute. Look at how that 1 minute just skyrocketed. Right, but this is like overall, it's not that as big as what we have. It's more discrete, generally speaking, from here to here. So yeah, as soon as we start coming down towards 43.72, then you're gonna expect like something to happen right here. But I wouldn't like start selling now because price is still moving up. You know, the market structure is still bullish. I guess you'd want to see a little bit more weakness. You can still get away with like small scalp sells, but in terms of like catching the move, I think the move, you're gonna have a little bit more structure, like something more like this, showing a little bit more weakness. Right now it's still showing some strength overall. Still above this level right over here. Structure's still moving up bullish. I think it's gonna hit 4,400 then drop. Yeah, let it hit 4,400 at least, and then see if there's any kind of serious volume to the downside. But also the time is gonna play a quite important role. Right now it's 4:30 a.m. Eastern. So you're gonna wait till if it hits this and then starts coming. 5 a.m. might range, and then by 6 a.m. as it starts to show more weakness, then you will have a higher chance of actually getting that pull back, even if you get it a bit higher up. If you see like 5 a.m. ranges and I was approaching like 6 a.m. Eastern, you might have a better chance of actually catching that top. But right now, definitely for 30 a.m., next 30 minutes, I would actually anticipate maybe some little bit more bullish continuation and then a little fizzling out. Because the daily is already up 1.54%. You know, it's already had a pretty big move. In and out the market like a speed dating. So like you see sellers make money, buyers make money. You see the sellers over here, they still made money like about 40 pips. But you see if they get greedy and they hold their position back into drawdown, back into BE or drawdown. See, if you're not greedy, you can always get away with something. Like speed date. In and out. There's little 40 pips here. Date this trade for 2 minutes, 3 minutes, and then you're out. That rule is so bullshit. Like some funding programs say that you can't trade, you can't hold your trade has to be a minimum of what, like 5 minutes or something crazy like that. They always make this stuff up as they go, like trust me. Because they also know like these trades, you're gonna have better trades like this too. You're gonna have better trades. Like you see like 1, 2, 3 minute trade right here. But they say, oh no, it's gotta be 10 minutes, you gotta be in that trade. Because they know the longer you're in the market, the more chances you're gonna have to lose your money. And you get stuck in this situation, see that it like pulls back up. So you really like have to rely on these other type of moves, which just like keep skyrocketing. But it could also play out in your favor at the same time, because at the same time, people close trades too early. And those trades are closing too early, they're running. You know, most of the time we're gonna have a problem with also closing trades too early. That's also another thing. So actually it could work in your favor too, but I guess it depends on what system that you trade. Alright, these are the models like just Ren. That Ren, this Ren. This one got faked out. This Ren, this Ren. That's a very tricky one here. Ricardo caught that one, but that's tricky. Maybe I would get it if I was also like relying on the bullish exuberance, because the daily is moving quite a lot. Maybe just hit it based off the volume. But this was a lot cleaner though, but that was a counter trend move. Yearly time frame. Yeah, you gotta be your yearly trades, daily trades. They have all the data that shows where trades are profitable. That's true. Like there's a certain amount of areas where you get some kind of confirmation. You know, get some kind of a confirmation. That's where most profitable traders are gonna get, like roughly within the same zones. It doesn't even have to be the same entry. It could be roughly like one guy could have gotten it here. Another guy, because he was using the flow chart, could have gotten it here. But you're roughly in that same area where there's a high probability of one thing happening over the other thing. And it's also kind of like a gray zone, because it's like a policing thing that they do. It's kind of a gray zone because they can say, oh, you've been following signals, right? Like this is obviously copying somebody else or something. Sometimes they can say that if they just need to say it. They give themselves the leverage of policing based off those gray areas. It's just the same way if a cop really wants to fuck your day up and he catches you like going through a red light, or not a red light, but when the red light is orange and you're in the middle of the road and the light is orange, you know you're not going to stop in the middle of the road. You're already on the road, but the cop might just stop you and say, hey, listen, you're meant to stop. Why are you in the middle of the road when it's about to turn red? You know, it's like a policing trick. There's always like some kind of a gray area somewhere. If you live in a first world country, you don't know what I'm talking about. But if you've experienced like corrupt policemen, they have like these little tricks that they use. That's the same thing a fund programs do. They're gonna have themselves like some gray areas. But you know, at the end of the day, they're giving you opportunities. So beggars can't be choosers. If you have a skill, at the end of the day, you're gonna be okay. It doesn't really matter like the amount of policing that they do on you. You'll always have more options, and you'll always have that skill that will build you what your personal account. It'll build your personal account. I'm fine with cutting trades. I prefer winning more than multiplying my reward on any single trade. The UK has them cops too. Those cops, when I was living in Germany, man, Germany doesn't have those cops. Actually, can you bribe a policeman in the UK, Woods? I would never think about bribing a cop in Germany. How's it in Portugal, Ricardo? I feel like in Portugal it's a little bit more chilled. I met a couple of them. Portuguini. What's that? Bro, 50 pounds whole note? Yeah, it's usually like about that much. Well, 50 pound, you know, because it's in the UK, it's 50 pound. But if you translate that into other currencies, you know, the pound is very strong. So we can say roughly around. But like these little misdemeanors, these little small things. If there's a corrupt cop, yeah, it's just about like 50 or 40, 50 for sure. Free to go, sir. No problem, sir. Yeah, the pound is pretty strong though. In pounds for a typical cop in, for example, South Africa, then in pounds we're looking at like 30 pounds. Equate to about like a 1-to-1. 30 because of the difference. Like 30 would be, let's see, GBP to USD. Let's see, 30, no, GBP to ZAR. Man, the ZAR is so weak though. Maybe it's even less than 30. Yeah, it's even less. Maybe in South Africa it's like probably like 23 pounds. Somewhere around that much. £23. Hey, speed is in South Africa right now. For those of you in SA, I show speed. More and more prop firms are now restricting traders to use 1% max per trade. Where I'm from, you could sometimes bribe a cop with a Coke. Hey, a cold drink. Hey, just buy me a cold drink, brother. That's what they call, yeah. That's what they call drinks there in SA. They always ask for a cold drink. Never bribed a cop in my life, but when my wife was in hospital, I bribed the doctors with £1,000 UK equivalent to make sure my wife was as comfortable as possible. Wow, W Woods. That's nice. Everybody gets a ticket every now and then, you know. That's what Warren Buffett says too. Like, if you're gonna put a cop on anybody's car, eventually that person's gonna get a ticket. Eventually, everybody's gonna get a ticket. You can't follow rules 100% of the time. You're always breaking a rule here or there. And you see, as we're approaching that 5 a.m., it's starting to like chop a little bit here. You're always going to break a rule every now and then, just like your accounts, right? You're never going to have always a perfect streak of following rules completely. You know, there's always a cop following you here on your journals as well. There's always a cop who's kind of like tracking you. And eventually you're going to slip up. Now, the question is, how do you manage that slip up? Can you manage that slip up? You know, if you've been in those situations before, you're going to know how to manage that slip up, right? especially if you know what the price is. Should always know the price of things as much as you possibly can so you don't get ripped off. If you know the price in the system, then you will have the upper hand. And the cop will know this, and he's gonna know, man, this guy is like, he knows too much over here. So when your trading results also get to that point where you hit a red light and you go past that red light, like, how are you gonna deal with that negotiation, right? Are you gonna keep over trading? Are you gonna keep stacking onto the losses? Are you gonna panic? You know, if the market now sees you panic, now it knows that it has you because you don't know nothing. And at this point, you're gonna become like very easy to manipulate. Right, so those back-to-back losses that you're gonna have, they're gonna be much easier. Gonna play a psychology trick on you. You know, you're gonna paying up more than you should. But at least once you have that situation happen to you a few times, then you know how the game is played. So you know how to approach it the next time you find yourself in that situation. And usually the best thing to do is now base it off experience and start taking things slow and understand that this is how the game is played. This is how the game is played. This is what the market wants you to go through. You know, we're gonna start the year with a W, but then those losses are just around the corner. In this whole 2026, that next losing streak just right around the corner somewhere. But we already know it. Take money from day trading and put it into investment. Yes, sir. That's the best way to approach it. Let's make some bread. But I think the cops in Germany, what they're getting bribes more of, it's not like little misdemeanor things like this. What I started to realize when I was there, it's more of mafia orientated. It's not. It's that they don't deal with these petty. They don't deal with this petty things so much. These road rules and stuff like that. Their money is coming from mafia, and it's quite noticeable. You're gonna walk around certain streets and you're gonna see certain operations going on. That's where it's coming from, and you know those people don't get bothered. It's still so crazy to me that the market doesn't know me, but it can move in ways that look so personal. It's super intelligent. Yeah, that's a personal thing that a lot of people face. They think it's a personal thing that the market is out to get them. But, you know, I'll tell you what the truth is, why it does that and why you feel like that is because the market doesn't always move linearly, right? But it's most of the time, actually, the saying is 90% of the time, markets generally speaking are consolidating. They don't fluctuate too much. They're quite stable. They're like a stable coin, right? So if you look at something like USD, let's say USDT, USD. Wait, is it USDT? Yeah, USDT, or let's say USDC. USDC. Can we get a nice chart though? Well, anyway, let's use then USDT. USD. Yeah, it's more like this. You can imagine the market more like this. It's like a stable coin, right? It doesn't have too many. It doesn't have create too many fluctuations. But this is US. This is USD. Even these fluctuations, quite wild. But I don't think they're detrimental. I think these are maybe like 1% below the US dollar. Maybe this was 2% above or something of the sort. But overall, it's like stable. It's stable, right? That's how you can look at the general economy. That's why you're never gonna wake up one day and find your money's gone to shit, because it's stable, generally speaking. So the funny thing is that kind of sips onto the intraday time frame. Even though on the intraday it looks like crazy and we're making moves, what the market also does that makes it feel personal for a lot of people, and this is my theory, is because it moves like this. It doesn't always just move in one direction. It's most of the time just also consolidating. In a sense, you know, you're always having this tick data as well. This tick data where it can even go like this. You see how it like chops like this? You can chop like this. That candle can still be open. It can still manipulate your trade because it does that. Maybe triggers you in. It does this, triggers you out, and then eventually it does that, and then it closes. So now in hindsight, it just looked like it moved up. But in reality, that same thing is happening. That continuous thing is happening that's making it seem personal that for everybody. So that's what I've realized over the years, and that's why everybody, no matter what you trade, always has the same kind of experience in the market. This is a little head and shoulders inverted. Left shoulder, head, right shoulder. Keep moving up. Algorithms keep the stablecoin stable realistically. When the price deviates away from partly, algorithms will correct in the pursuit of money. Reverse head and shoulders. Yeah, reverse head and shoulders possibly forming. Already used my shot for today. The 1W. Yes, sir. This is got like little liquidity grab situation there as well. Let's see if it hit like 16 pips. Oh, just a 12 and then reversed. That consolidation got faked. This one played out. This one got faked. Oh, 16 pips not yet been hit though. It needs to break above these highs. But very sticky situation on these sellers. There needs some spiritual intervention here for price to come down. Got this little fakey over here. It's like a miniature inverted head and shoulders that's forming. You can see this right here, here, and here. Now that nice little SMA is about to come in. You see, like we're about to get that SMA crossover. I think that's 8 about to cross the 50 right here. You see, then break above these highs. Should be wiping them out soon. Then you get that liquidity grab confluence down over there. That inverted with the daily bias bullish. Break the highs and skyrocket. See, after this candlestick closes, we should also get that SMA here crossover like this. This is coming off of stop losses. Oh, just about, not yet. It's almost, oh, inverted middle finger. Inverted middle finger to sellers. Sir, the surviving by a thread right here. See, that's why all this is at 16 pip. Remember when we did the simulation, what happened is we got here and then we put it somewhere like this. And then it came like this and then it just dumped. Because it needs to be accurate like that. Because once it takes that out, it's fully mopped them up. Right now, it's still like forgiving. Right now, this is stuff like spread. Spread sometimes get out the initial herd. The spread sometimes that's enough for the market. Just the spread getting them out. I still play that psychology as well, because some people, what I used to do a lot, spread would get me out and then see that happen and be like, oh no, this is good. And then you get back in, then it goes up against you. You get to take like 2 losses in the same spot because it made it seem like, oh man, like I just got stopped out early and then now it's gonna start going my direction. So that's an option that it usually has as well. Man, let me tell you something. You gotta be intimate. You gotta be so intimate with your systems that you just know, like, from this certain point to this point, there's a certain amount of things which can happen. There's a certain amount of like psychological tricks and certain outcomes that you can expect. You're like super intimate with your trades, because like when you see that happen over and over again, you feel very convinced about or you rather build confidence in the way you build a relationship with the instrument, right? If you're really locked in and you have that, you know, from point A, you see, like from point A to point B, there's a certain amount of things that it can do, and then you just lock into that, because the rest of it is just like random, right? The rest of it is random. It's only these like important areas. If it breaks these highs, that would be an entry confirmation for buyers, taking out the sellers down here. Yeah, sometimes you get these easier trades. See, like stress-free right over here. This is not stress-free. It's a very psychological position, because the trade which comes out of here should be stress-free. So if it actually even like comes and takes these highs out, that would be the distribution to go up, and you'd want to see that follow through similar as this. Those are going to be your best trades, you know, like even the one that happened here. Boom, 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 went up straight. Oh, look at that shit. Oh my god. Sorry guys, mind my language. I gotta mind my language, man. I'm getting I'm getting shadow banned by YouTube because I think I'm swearing too much. Yeah, but you see that little psychological trick right there. Now it just came to hit their this is so volatile, it's crazy. This is so volatile. It didn't even push towards like 16, not even a 1-to-1 yet. But it did break structure, so that would like be BE because we broke this key structure right here as it took out these lows. Because the idea is like as it's taking out those lows, it shouldn't be breaking structure and then pulling up like this. Because another way markets should actually move is if it breaks structure, it should continue in that direction. Because you know how many times does it break structure like that and give you a re-entry opportunity on a winning trade? You know, most of the time it doesn't give you that re-entry opportunity, and at that point it's like 50-50. It's more risky to hold, but yeah, there's a lot of psychological work that's going on here. Should break and then just keep going down like this. See, it broke and then came back into entries. Very difficult trade. It's a complete black and white from what you're experiencing like previously from these other entry models where prices kept going in your favor. And the idea is not to be right. You know, the idea is not to be right. The idea is to survive the very difficult ones and then keep hitting it until you get like the stress-free ones, but obviously not over trading. Take like 1 or 2 trades a day, 1 trade per session, and then that's the way you're gonna avoid a lot of the unnecessary paper cuts. Otherwise you get a lot of paper cuts. Full margin buys, no caps, no caps. Closed earlier, didn't like the movement. Yeah, very difficult. You see that psychology work it just did here. Because we've seen this happen so many times. Didn't even need to go the full 16 pips. Now, even with the strategy you trade, you have to look at how many pips is it that needs to be respected from point A from your entry. You know, like, is it 16 pips? My strat is like maybe 16, 20 pips. During this time, it's actually 20 pips. Preferably 20 pips. Give a little bit more breathing room by 4 additional pips. Right? And then you see like what's the best amount of pips to avoid unnecessary stop outs. Now the problem with this is when people start to do this, their stops increase. Naturally your stop is going to increase. You're going to say, oh, okay, 20 pips this time. Next time you're going to see 25 pips. Next time you're going to see 30 pips. So it's also, you got to find that balance, because otherwise I got stuck in this loop myself where I just kept increasing my stop, increasing my stop, increasing my stop, increasing my stop, because every time it just gets stopped and then do that, stop and do that, do that. But it's important to know when you're wrong as well. Like what it is that completely disqualifies the trade as a profitable trade. That's also really important. Otherwise, you keep falling in that loop, like continuous readjustment. It's collecting liquidity fly again. It's making it even look a lot cleaner now, though. You see, it's even made it a lot sharper, a lot more cleaner to see. Much like that one was when it distributed down. This one's also getting a lot more clean and easier to see, which is typically the ones that you should be striving for. I would say in the beginning, like when you're trying to play it safe, like little nice sizes like that. It's a lot easier to see, a lot more stress-free to execute on. Like something like this would be beautiful. Break of the highs by 43.89 with the daily bias being bullish. I think that would be the play. That would be the play. But it's got 2 options now. You see like how it's created this wick right here. That's a key wick, and that's a key wick right down there too. So it's stuck in this range. Now this range here is like 50-50. So now you gotta wait and see what direction is the market gonna go. Now it's an accumulation. It's at the auction. We like to think of this like an auction, right? You got buyers and sellers. Can we get some buyers over here? Range are gonna get some buyers. Do I hear them buyers by 43.88? We got any sells? Asian, do we got some sells? 100 lots. I hear 100 lots on 43.89. Jane, can we get Jane buys here by 43.87? 43.87. Going once. See, that's like this whole section here. And then eventually, when it's sold, then you're going to see price move. It's going to distribute. It's going to distribute the orders. It's going to distribute the up or bearish. But whatever the case is, it's moving from this point A right now. Yeah, distribution, and it's going to distribute. I'm done for the day. 2 W's. I'm good and follow the rules. If I get 80% this year of following the rules, I will get to my objective for sure. Taking the last one just to go up. Nice. Yeah, we're just paper trading this. You know, I like to paper trade. It's 20 SMA goodbye at 15 minutes. By the way, don't take any positions here if you're going to be a victim about it. Just watch. Just watch and paper trade. If you know you're going to be a victim about any position, don't take it. Just watch it. Nice breaking. This candle actually should rip up. This candle right here should be the one that rips up. It should show the volume that is coming in. You got about like 48 seconds. You can pull up at any second. Ideally, this should be the one that rips up. 30 seconds. Even in the last 10 seconds, this thing can push up. Sometimes push up in like last 7 seconds. Just pull back, pull up and reflip. Hours closing. Yeah, we got hourly close. Like 5 minutes. This would be like that simulation trade that we took on the last simulation. Remember, like we waited for the hourly to close and it actually gave us time. And that was like about the same amount of time, like 5 minutes. And we're just waiting. We're like, oh man, this thing shouldn't break. Shouldn't break. Then we got the new hourly candle and then it broke and then we took it. It was like a sell position on the simulation. So it would be nice if that actually gave the luxury of waiting before the new hourly opens, so you can avoid any hourly pullbacks. Because hourly pullbacks are quite pesky. But you know, sometimes as well, there's a probability of it just pushing right before the hourly open and then distributing, and then it's already gone by the time the hourly opens. That happens too. So ideally, you'd want the hourly to open first, create a new high, and then break the lows if it's coming down. But at the same time, I personally would just take it, to be honest, like even before the hourly open most of the time, if the structure looks good. It gets you in a gray zone. That's the market policing you right now, basically. It's got you on an orange light. You're basically at an orange light right now. You're orange right now. You're crossing the road. You're crossing the road. You're taking that risk. Maybe today there's no cup over there around the corner. So you're like, I'm going to take this little orange light over here. I'm going to go through the road. I'm going to through the road. Maybe I can make it. You know, that's basically what's going on here. It's got about 3 more minutes. 3 more minutes till that hourly opens. You see how it squeezes you right till the moment of HTF candle opening? Plays with your psychology quite a lot. Like, why it has to give a setup right before an hourly open? It's a counter trend move too, as it's breaking the lows. It's like really real predicament. Quick U-turn. Yeah, let's see how it plays out. I'll personally wait for the break above the highs if I was trading during this time. But let's see. Let's see if the sell actually plays out. Taking the last one, just don't go up. When we watch it and it moves crazy and then we FOMO. Yeah, like 2 more minutes. What's that Owly doing anyway? Oh, Owly's been a doji the whole time. And this Owly didn't even have any moves. Like, really like any overall direction. 1 minute 30 seconds. It's been a doji, an indecisive candle. Panicking trader wants to collect a 44. This bullish momentum is a thing though that it's still looking very juicy. You know, but if you capture a sell-off, man, a sell-off could pay out really nice, because that's gonna be the first there's gonna be first chance of, like, if it's gonna be a sell-off, you're gonna notice this afterwards, right? You're gonna notice price is gonna distribute like this. If this actually plays out, it's gonna distribute. You're gonna notice this afterwards. Then you're gonna look at it and say, oh, now it's selling off when it's a little bit more down. But this is an area. This is quite a potent area to when that could be coming in. So although it is a counter trend move, it holds like a lot of like weight for potential bomber clot. It's basically the same thing that happened here. Like if you would miss this trade, for example, like price would have come back up, retested that zone, and then maybe that would be the continuation after it shook this sellers out. That could have been also the key for what the market was trying to like shake this sellers out over here, coming back, retest, and then continue. I would say like you never really miss a move in the market. All right, here's the hourly volume. See, it's attempting to distribute. Exactly, it is breaking the lows. It's already down about like 16 pips. But you know, the idea is like it should never have even broken the highs if it wanted to move down. It should have just broken the lows and then just distribute downwards like that. This is definitely the point A. See, what did it peak there? About 20 pips. See, just about like 20 pips. Remember what we said about TPs in the beginning of the stream? You're gonna start seeing reactions anywhere from that 16 to 20 pip level over there. You're gonna start to see a few reactions. You get a dump it. Bro, where did you get that 1,500 sell today? What do you mean market hasn't pulled down? You're gonna tell me market hasn't pulled down? Dude, this market, the most recent move we had here was 38 pips. This one was 18 pips, but in the earlier sessions, we had a range over here on the 5-minute that a pulled down. What was that range? Oh no, this is on FXCM. That you'll see it on Owanda. Because FXCM chart opened up late today, but this was the range that we're looking on the 5-minute. Right here, from here to here. Then price came down. Price can't move in one direction forever. It has to, there's always buyers and sellers in the market. Always buying and selling. If you're just looking from one time frame, then it looks like it just goes up. You know, like if you look at the 30-minute, it looks like it just goes up because there's not enough structure to read. But like when you get on lower time frames, you're gonna see a lot more structure. Buyers and sellers make money all the time. Even this right here, the sellers made money, albeit that they are not greedy. They made some money over here. Nice little 20 pip move, sell off to the downside, and you see now it's coming back to retest the zones. You're always gonna make money in the market. Buyers and sellers make money all the time. It's just like if you're too greedy, then obviously that's when you get whips. Trying to pump it up. Pump it up. Pump it up. Pump it up. Bro, how can I get a bias like yours? Get the indicator, free indicator in the description box. Man, just makes it a lot easier for you. It helps you to avoid unnecessary losses, especially if you're having a hard time with market structure. Then this indicator here is going to help you a lot. It's a daily bias indicator in the description box. At least you know if that thing says bullish and there's no gaps on the daily, then no gaps like on TradingView. I know there's gaps on brokers, but if there's no gaps on like TradingView, then it's showing you the overall volume and direction you're going towards. Because look, you still get a higher chance of a running trade today to the upside than you would to the downside overall, because the candlestick just went up. And it's gonna tell you when the market is trending. This makes your job a lot easier. I wish I had something like that when I started trading. I didn't. You know, I had to learn higher to lower time frame analysis, which confused the life out of me. Because 5-minute was moving down, 30-minute was moving up. My mentor took a buy, I took a sell. He said he was bullish, but I learned that it should be bearish. And then, you know, it's very difficult. But this makes a very clean cut. Over the years of refinement and understanding market structure, this is what the product is based off of. It's just based off of like, how is that daily candlestick moving? Is it moving up or is it moving down? It kind of eliminates a lot of second guessing, especially if you need that extra confidence, you know, if you need that extra confidence, it eliminates the second guessing a lot. Yeah, you see, man, it's coming back for those retests again. It loves to retest. Remember, that's why I said you always find yourself get stopped out at break even. It feels like you're always getting stopped out at break even, or your TP is almost getting hit, because the market operates like that. Remember, I said it doesn't move linearly, it chops up a lot. The same way like these sellers got stuck in this chop, it came back, retest the entries, and then continued down again. It's doing the same thing on a smaller scale to these sellers right here. It came up and then chops like this. This is why you feel that you're always getting stuck at break even, or your TP is always kind of missing sometimes, you know, because the market, this is how it operates. It moves like this. So it doesn't matter if you trade FEG, Fibonacci, whatever it is, you're all going to experience the same thing. You're all going to experience the same thing. But, you know, sometimes you keep like putting in the work, like being consistent, showing up to the chart every day. You never miss a lucky day if you show up every day. You get like these bumper clot trades, which just like clean, smooth sailing. Like right here too. It's like the break right here. Dun. That smaller one here. Although that one is not the cleanest, to be fair. You got one cheeky one right over here. If you're convinced about this move. One here. First one was a fake out. Came back. Took your stop loss. Pushed up on the second attempt. Retraced. Came back. Retested these zones. This is where the previous buyers were. As you can see as well. Came back. Recalibrate. See if Ricardo wants to get some more buys. Set up again. Bullish continuation play. Break of the highs. Filled up the range. Continue to move up. And it's like you keep executing consistently like that. You never miss a lucky day if you show up every day. Yeah, like those much more smoother trades. See, like this not as smooth because it's come back to do that psychological work again, potentially even taking people out, because that's a much deeper pullback. Pullback around like 20 pips on that one. So that's what it is. Like, stick to your system, learn your system inside and out, lock into that system, understand the flow of price during when you're trading that system, and that's when the magic happens. But if you're all over the place, then you see, you can't read that psychology. This feels like so random and personal. When you see like certain things like that happen, like look at this, oh, why you come up, do like 20 pips and then start coming back down so aggressively. Then everything feels so personal and it feels so misguided and confusing. But you stick to that system, take your losses, take your wins as they come, and understand like every single setup is like a piece of cake right here is gonna have a different taste. You know, it's like one piece of the cake, then you're gonna try another piece of the cake over here. Let me try some chocolate cake here. Let me try some salted caramel cake over here. You know, every cake is gonna be different, and maybe sometimes you get that same cake, that salted caramel, which comes and it's a bumper clot. You know, they're like, oh, I got my blindfolds on, but this tastes like a salted caramel right over here, and then this tastes like what do we say this was, like a chocolate cake. It's like a little chocolate cake over here, so they kind of give you a bit of a hard time. But the important thing is you're consistent. You know what you're doing, you understand concepts, and you're applying yourself to those concepts. It's a two-way street. What do you intend to achieve in 2026? Man, if I can break my record from 2025, that would be amazing. This is a record for me here for 2025. So for 2026, I just want to perform as close to this as possible. As close to that as possible is my goal. So we're going to see how the year goes. But the thing is, now at least I'm more prepared. Because in 2025, I didn't know volume was coming. Like a lot of us didn't know volume was coming into the market. This is all a surprise. We just got a 2,000 pip candle last week, Friday. You know, for example, we didn't know that there's going to be much volume in the market. But now we're prepared. Now we know. Now we know. So I'm going to see if you get some nice running opportunities. You know, I think that would be the difference. But if I can get as close to this number as possible, that would be perfect. That will be perfect. So let's see. Off to a good start. But at the end, it's just also just 2026, just repetitive actions. I feel like with any kind of business, you need to give yourself a little 5 to 10 years to really see some exponential results. Yeah, this is fizzling out. That's at 5 a.m. 5 a.m. Eastern candle. It has this fizzle out thing that we also mentioned before. You notice a lot of the things I'm saying happen in the market. Of course, I'll never have 100% accuracy. No one has 100% accuracy to be always right. But there's a certain probability of those concepts or those ideas being right. Damn, look at this. It's doing some serious range. It's breaking this one to go a reversal play confirmation here. With that same inverted head and shoulders. There's a mini inverted right there. There's a mini inverted. See, it reacts if it breaks above this high. It's by 43.88. Because by then, whatever sellers haven't been wiped out yet, they'll be wiped out here. Because some people use structure. Remember, like the way I trade doesn't mean everybody trades that same way, even though we get stuck in maybe the same idea. But some people use different kind of stops too. But for anybody who's not been stopped out, but also, you know, it's tricky for them because they have to like also get bigger moves. So you see, it's that's that balancing act again. You got a bigger stop loss, your targets don't fully get met. You got a smaller stop loss, you got a higher probability of your targets getting met before the drawdown. You got a bigger stop loss, targets don't get met before drawdown. You got to deal with this additional situation right over here. So trading is all like a balance game. You know, a lot of you are gonna experience this. Trust me, you're gonna experience this. Once you start experimenting with stop loss placement and TP placement, you will realize exactly what I'm speaking about. But now I see it's giving us this guys people a chance here to reduce their stop loss to manage risk. So this is the last frontier for them. If it breaks above this wick, they're most likely out of the market, like, or at least a good portion of them. Then you still have the ones which are a bit sitting ducks, which are just right above here. It's unnecessary to have stop losses in areas which just don't make sense, because sometimes you're going to put your stop loss here. But why put your stop loss here when the structure here is already telling you that this needs to be respected for price to come down? Then it doesn't make sense to overextend your stop loss, because now you're just wasting pips hoping to get lucky. You know, that's also something that people deal with a lot, is like where to put the stop loss that makes the most sense, that if it really does break a certain region that you want to be out, so you don't have to waste additional pips and draw down. But you see, as of right now, everything that's cooking up on gold is cooking up literally like right here. Everything that needs to happen for you to catch the next bumper clot is cooking up here. And you can tell the story, but not just from your eyes. You gotta tell the story with whatever you're trading, but from other traders' eyes too. So if you trade like ICT concepts, you can see where the other ICT members could be looking at their stop loss placements, their entry. Some ICT guys gotta buy here, some ICT guys gotta sell over here. So you're just kind of like weighing out and trying to get a feel for the other market participants as well. Trading is a lonely game, but it doesn't have to be lonely, not if you like fully understand from like an objective perspective. A lot of us forget to do that. We forget to think about the other traders. We're always thinking about ourselves, especially when you're in like a drawdown. You're always really thinking about yourself and your trade, and you know, you're not giving yourself a capacity to learn beyond the fear, because you know what happens when you're full of fear? You can't think clearly. You know, you cannot think clearly. That's where you start making mistakes. That's when you start rushing. But if you give yourself the capacity to take a step back and be okay with certain outcomes, and just so you can give yourself a chance to learn, then you free your capacity up so you can actually see from a different angle. You know, sometimes you gotta catch yourself when you're having these bad thoughts. You know, listen to the way you speak to yourself when you take trades. Oh, I hope this plays out. Man, I hope I get lucky, like I wouldn't do this mistake again. Or like, listen to those things that you tell yourself. Are you learning from the trade, or are you betting too much risk on that trade? Like you're too married to the trade. And that's why paper trading, man, paper trading is a good way to learn how to do that. Don't actually take the trade, but just watch it. Watch it and then study it. You know, we used to do a lot of paper trading. A lot of paper trading in like, when I started trading in 2020, we did a lot of paper trading up towards like Even up to 2025, we did a lot of paper trading. And then TradingView, I think it was in the beginning of 2025, also started hosting, or towards the tail end of 2024, paper trading competitions. But man, paper trading has always been a thing that I've been doing in my communities when I was learning to trade. Some communities, they don't teach you paper trades. They don't teach you about paper trades. You only know about trades. Average trader need wisdom from successful trader to transform with hard work and practice. Yes, sir. Look at that. You see this? This is the last frontier right here. Buy 43.88 for those sellers. Trust me. We've seen this happen over and over and over again. So if it just the same way as they did not get where was that other region? Anyway, let's just see what happens. These are the ones who are still in with bigger stop losses. I'm just sharing with you my perspective. I'm not sharing with you like anything but just what my experience is, because everything you're learning here is TFX concepts. You're learning from me. Like, I'm the source. What you're gonna learn from other people, ICT is the source, right? You're learning from the source here, so you don't have a reference point to other influences and other people in that same space, as you would with any channel with trades like ICT. So you got to be patient. You got to be open-minded to actually understand what's going on here, because we've been doing this for years. It's definitely not something that I've also been fond of, having these bigger stops, because of this scenario as well. That I found, like, with the bigger stops, you almost get your TP hit, then you get stuck in this unnecessary noise. So I was like, always thinking like maybe like 16 pip stop loss. And before, we would always get like structure on the 16 pip too, but like in 2025, because gold candles were like much smaller. So I would always have like a support or resistance to put my stop above. But like 2026, we haven't not had trades with much structure. Like, it's just all volume. So your stops are going to be in awkward areas, like just within the ranges, like right here, like right here. But the good thing is the volume, so it doesn't even come up. If it's like a sell, it just like plays out like this. This is a risky sell as well. This was a counter trend move. I would personally have not taken that trade. I saw the trade. I would not have taken it. I would still be waiting for buys just because daily buys is bullish. Now, the setup was there. There's a probability of that setup playing out, just the same way as this one was playing out here. Boom, boom, break of the lows, distribute, come up, do the same thing, break of the lows, distribute. But I think the bomber clock is still the buys, if anything. Unless now this starts to break again. If it starts to break again, then damn. We might see price actually just sell off as we're approaching 6 a.m. Eastern. Full margin. Crypto is pumping. BTC USD. Yeah, crypto. Oh, crypto is holding 87. Let me bring this down a bit more. 87.007. 87.007. On the 4 hour here, it's accumulating. Respecting 87. You see right to the T, look at that. 87, 87, 87. 87,000. Do I hear buy at 87,000? You got any sellers here at 90,000? Do I hear any sellers? Got any sellers at 90? Because it's about distribute from this region right here. About to see cryptocurrency maybe do, or Bitcoin do correction, a nice little pull up to the top side if it can break above like 9600. Because it found support. It's waiting for that distribution. Also, gold is waiting. You see how it's hesitating here? The seller's stop losses are still trying to be protected right over here. It's in a very delicate area, gold is. Very delicate. It's about to have a move. Same as with Bitcoin. You see, Bitcoin is a very interesting area here on the daily. Higher time frames are accumulating nicely before a break. Very freaking delicate. Look at this 5 minute. It's really battling between mopping up the rest of the sellers and going upwards or just pushing it down. You can see the sellers play in action here. This is how I think like institutional trading is like. You got the sellers who are really willing to stake on the price going down that they put in those orders. It's going to cost them money, but they're going to try and push the market down. You see now the buyers are coming in. You can almost sense this. I don't know how to explain it, but you can almost sense this. People all you see how it breaks? It's mopped them up right now. It just took them out. It took out these other ones here, the stop losses from above. Oh man, tricky. I tell you, like, trading is just a game full of shocks. It's got shocks all over the place. You got like an inverted head and shoulder here for them too. But I said that would be the buy I was talking about, because daily bias is still bullish. So I would still feel comfortable with even if this was a losing trade, I would still be on team blue. I would just feel more comfortable with like a potential run as a buy, because you're up like 1.57%. So it's like also kind of like picking teams. You don't always got to take the trade that you see. You can also wait to take the trade that you just feel more confident about, you know? So whatever outcome that is, you're like, I made the right decision there. Let's say like mop them up. It's mopped them up, completely mopped them up now. Now it's gone for the sitting ducks. You know, this is a risk management. That's insurance. Some people don't take their insurance. They rather take the full stop loss, because for whatever reason, they take the full stop. They say just took them out right here. You don't even need bookmap. You don't need any of that stuff to see it. You just need to lock into your system. Understand your system, how it operates. I don't know if y'all can see what I'm seeing. Just leave a 1 in the chat if you understand what's going on, and leave a 2 if you don't. I don't know, maybe I'm just making this up. Maybe it feels like I'm just making this up from your eyes. But let's see. Leave a 1 if you see what's going on, or just leave a 2 and just be honest if you think like you're not exactly sure. This is a high confluence area. Very delicate area this was. That's why for me, I like being at point A to point B faster. You know, you can get to point A to point B as fast as possible. I always think about like swimming through the ocean. You're swimming from island to island. You know, the shorter durations, you're going to be having a higher chance to survive. But if you're going to swim like a long duration from here to, let's say, TP down here, it's always a harder swim, you know. There's a lot more variables to consider than from here to here. Don 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 don. Got the Jaws theme song. You know, it's always when the guy is right about to get out the ocean. He gets out the ocean right before the shark gets him. Boom, then the shark goes back in the ocean. Or he gets on the boat, gets in the boat right before the shark gets him. One until it changes direction. Took a paper trade in profit. Nice. Yeah, this was all just like a tension which was being built for distribution. So that was a flow. The flow to wrap this analysis here was the sellers indeed did come in right here and they secured something. Remember I told you before, like 16 to 20 pip range? It was right here. That was 16 to 20 pip range. Secure something. Awesome. You still got other people who are going to put like stop losses above here. They're the ones who got stuck in this situation. So they had two options. Either keep the stop open or take the insurance. I always take the insurance because there was no reason why not to take insurance, because now you're just fighting the market. Take insurance instead of losing, let's say, in this situation, they would have lost around, let's say, like 32 pips. Instead of losing 32 pips, they're going to lose around like 21 pips. Take that insurance. Manage a little bit of risk. Because as that's cooking up, and let's say you're not even in the market yet, you're seeing all that happening. You're seeing all that play. So you're like, okay, so, you know, if price breaks about these highs, I think I'd rather be on the buyer side because, you know, overall we are bullish and it shouldn't even break those highs if their trade should play out, because this is just too much. This is too much unstress-freeness for a good trade. You know, that means that some market's cooking something up over there. And then it came in, the buyer saw it coming, it would like break these highs and then it push around. Let's see how many pips. Push around here like about, ooh, just about close to 16 pips. So close. This has been very difficult. So close. It's just choppiness. I think it's just because of that 5 a.m. This is that 5 a.m. candle. Should have seen a bit more of a follow through before it even comes and pulls down this heavily. Because then it's just chopping, because it's no direction. If it's like pushes like this and then comes like this, pushes like this and then comes like that, it doesn't give enough like of what we call a follow through. We haven't yet seen a follow through. Let's see if they can survive. I've not yet seen a follow through. It's just like fidget spinning right here in this general vicinity. Fidget spinner. Hey, 2026 is going to be the new 2016. Have you seen that trend? 2026 is going to be a new 2016. Bring back the fidget spinners. Bring back the damn Daniel. Damn, Daniel. That's how the market's doing right now. Damn, Daniel. Just let some follow through. Give a follow through, Goldie. Where's my follow through? Damn, Daniel. Back here again with the white bands. Need somebody to lean on. Da, 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 da. Hello, I can't access the daily bias indicator. Oh. You have to try with a... The whole idea is you have to get it on your chart. So if you can't access on your computer for whatever reasons, try with like a different browser. Try a different browser. As soon as it's on your TradingView chart, it's going to be there. Go on add to favorites. When you click on the link, add to favorite. Try with a different browser as well if add to favorites not working. Or maybe you need to log into your TradingView on the browser too. But if all else fails, then you know you're gonna use a phone or something else. Try and get it on. What would I consider an A+ setup? Not this. Well, actually, structurally speaking, this, but an A+ setup is a setup with clean range on the left hand side. It's a setup where the market is trending with volume towards a certain direction, especially with confluence from macro fundamentals. That would be like an A+ setup, just very simple. Right now it's just not giving follow through. Like it's paying like something, but it's not paying enough to survive the fluctuations. It's paying enough just to right here. It's like always right towards the tail end of a reversal, like right here to here, and like right here to here. It's not giving that full follow through in any direction. So that's how you don't fight the market, because at the end of the day, the market is king, right? The market will do what it wants to do. So if it doesn't want to move now, it's not going to move now. It's 5:30 a.m. Eastern. Maybe it starts moving by 6 a.m. Eastern. And you can see the previous hourly candle closed like a doji. Quite a lot of indecision there too. So you're pretty much just caught trading the trenches. And the only way you're going to trade the trenches is if you can trade the 1 minute chart. Because you see on the 5 minutes, it's already too compressed. This is basically what you're trying to survive. You see? It's not an easy condition to completely survive. So you have to be very quick on your management. It's just compressing. It's not gone anywhere. It's stuck within a 66 pip range. So you gotta ask yourself, man, if you took a trade here and it was a successful trade, imagine that. Imagine taking a successful trade in this area. What concepts you use to get that successful trade? And because there's a lot less people getting successful trades here than there are people getting successful trades here. Because price is following through. See, here you got to be quick. You got to be quick on your feet because of pullbacks and everything. That's why I say always good to be cynical in the market. Don't be overly optimistic. Would be nice to see gold come back down and create a bottom wick. I've been liking gold in the last few weeks. Volume is no longer as one-sided. Buyers create a nice strong legs for sellers. My system is no yearly bottom wick, no entry. Oh. Then that means the whole of 2006 you would not have taken a trade. Do you think New York will dump in price? Dump it? New York? Yeah, we're gonna wait and see what happens. We gotta consult a crystal ball over here. Let's go and see if we can get some consultation from the wizards. Will New York session dump at 6? No. Will New York session dump? Is that the question? Yeah, I think that was the question. Will New York session dump? Let's find out. Oh, I should have said on gold. Oh, man. I should have said on gold. Anyway, let's see. Maybe it knows already. It should know. If it's a real thing, then it should know already. I meant that the New York for gold should come down. The indicator cautions with its insight, suggesting that though a temporary dip may occur, it will be met with a resurgence and ultimately avoid a complete dump. I think it makes sense. Because we're moving quite bullish, but it says it will be met with a resurgence and ultimately avoid a complete dump. So the complete dump may be the range that a lot of people think, like on the market open gap, 43.72. But we might see something happen here. You see it's accumulating. So we might even just make a run for 4,400. We're really not far off 4,400. Like to completely get through it. And if it starts breaking like this, and especially at a key time from 6 a.m. Eastern up until New York open, 4,400 looks like a more interesting, appetizing target than for price to just dump. You know, if it dumps, whatever, you know, it dumps. But where is it even heading to? There's no psychological marks. There's just structure towards that clean range. There's like clean range over here. But here we have 4,400. Here we don't have any psychological marks. Just structure, clean traffic. Well, I guess we'll get our answer from the next 30 minutes. What gold wants to do in the next 30 minutes. Then the volume is going to start increasing. I'm waiting for it to drop 43.50. Damn, Daniel. Damn, Daniel. CME opening gap 43.34. It's quite far away. It's like a spaghetti. This looks like a spaghetti. You know, it tries to break to follow through, and then spaghetti kind of falls over. Spaghetti price action. Break the low, comes back. Break the high, spaghetti gets wet, falls over. But it's nice seeing it on the 1 minute though. You got a lot more structure on the 1 minute. It's just breaking into it's like breaking into different you got one here, you got one here, you got one here. It keeps breaking into different dimensions. It has broken into a higher dimension here. You see, like with this higher consolidation, it came from here, boom, lower dimension, broke into a higher dimension. That's spaghetti. A dump on late NY session seems makes sense because gold has pumped quite a lot now. I would say whatever it is, just be ready to execute. You know, if it starts to come down, then it's most likely going to be a potential sell-off. But if it starts to move up, it's potentially going to be a buy. Just be ready in any situation. Plan your buy and your sells. You know, always get a good habit towards understanding where the buy and the sell is going to be. Because, you know, next time you're going to be ready for it. Whatever direction it goes. Whether you're going to take it or you're not going to take it, but you're ready for it. So you got any like chart work? Obadiah. Welcome, welcome. Is this Boondocks? This looks like Boondocks character there. Got consolidation. Oh, nice. This looks like wait, isn't it? There's a similar like area where this was. That was a risky one. But it played out with the volume because the daily bias is bullish. Breakout, nice. Yeah, you can see the sell-off there too, pretty clear. Ending would be E. Good trade, but a little bit of FOMO. What happened here? Could wait for a retest, but good FOMO management. Entry on the left. This is gold on the 5-minute. Nice. Nice one, Daniel. Welcome, welcome. Got Daniel kite surfing over here. What are these games y'all are playing? Ghost Recon, Breaking Point, Roblox, Minecraft, Obadiah, Grand Theft Auto, San Andreas. Nice little throwback. That's one of the best GTAs. Oh, gold's moving. Oh, okay. So we're already moving here. Damn. Price broke above the high and now it's moving towards 4,400. See, that's what I meant. Like, if you are gonna look for a sell, you might as well also start looking for a buy. You know, you gotta plan your buy and sell. Because now look, since I said that and you were just looking for a sell, you could have caught the buy because you're planning for both scenarios over here. So it looks like it broke with daily bias going up. You know, that's what I thought would actually have happened, like literally right here. But looks like this one was, you know, just like a small little test. But the main break was that higher dimension. It broke into the higher dimension over here. And then look at how it distribute. You know? That's like the, you know, if you watch Stranger Things, you have a Hawkins, then you have the upside down, and then you have Planet X. Planet X. That's where the Vecna lives. That's where Vecna lives. This is Hawkins. So this is like Planet X over here. This bigger one. That big one to distribute upwards. Right? Awesome. Now it's going towards 4,400. But you see, this was where the pit stop or the bus stop was. There's a few trades in there, no doubt. Like the sells did play out 20 pips, the buys played out close to 16 pips, but then the overall trade was this one. So there was about like 3 trades there. 1, 2, 3. Nice. Dollar is flying. See DXY. Is dollar really flying? I should like seeing dollar come down. Maybe the daily. Let's go and consult our Chinese indicator here. Yeah, Chinese indicator is saying that the dollar is weak. So your statement is false. And also gold is flying. And gold is pegged up against the dollar. Yeah, it looks a lot more appetizing here for price to go up towards like 4,400. Break these highs. Got about like 100 pips over here. Look at that distribution. Very clean, right? It doesn't give a hard time. Not like this one or, you know, like that one did when the pullback. Doesn't give a hard time. So you never miss a lucky day. Show up every day. You never miss a lucky day. You just keep taking the same trade. And every day you get a different slice of the cake. You see this? Tastes again like salted caramel. You got a salted caramel one here. His job is to like show up every day and just get a slice of the cake. Big push. There's a really nice push over there. Very nice push. You know what's even more important than this push? How we track the market. How we followed the market all the way from here and made so much sense to when this big push came. You know, not a lot of people can do that. No, especially because, you know, when you look at the 5 minute, it's very hard to tell a story like this, right? On a 5 minute time frame. Very difficult because there's not enough structure. But if you learn how to read the 1 minute chart, you got more structure, and based off your concepts that you trade, you can tell a really good story of how did we get to this point right over here. You know? They got that nice little SMA on the 5 minute too, holding up price beautifully on that break too. A little bit of a kiss of death situation that happened there. Beautiful confluence. Let's see, you got SMA crossover. Nice little SMA crossover on the 1 minute there, as well as price was shooting upwards. You can see SMA is still being respected there. It's the same thing that we had actually happen for this position right over here. As you can see, it came out with that bullish candle. The same thing here. It happened like a bit later as it was coming to break those highs. So a bit sooner actually before it broke those highs. Failure to break structure and price just holding HTF. Yes, sir. Now it's up 1.70%. Let's go. And then that cycle that we just explained, it's going to happen again. It's going to happen. That's why I'm not even feeling FOMO, because there's an abundance of moves in the market. It's just going to happen again. All you got to do is like learn how to read price action. There's an abundance of moves. You know, take like 1 or 2 trades a day and that's it. It's going to happen again. Hey, you missed this trade? No worries. Next one's around the corner. No worries. I played GTA 5 online and Ghost Recon. I'm waiting for GTA 6. 2026 is going to be like 2016. We're going to have a game to play again. GTA. And yeah, hopefully just get the vibes right. But why are we lying? There's no way we're going, like 2016 was such a unique time, man, like because the internet was not as developed. Like Instagram was literally not as developed. Like on Instagram, I would take a picture out of my bus, right, of a guy on the street, and that picture would get like 300 likes in 10 minutes. Now on Instagram, you edit a video, you pay an editor, you have all this shit going on, and you can't even get 10 likes. It's just a completely different time. But I think like with GTA 6, that's gonna be awesome. We already got our GTA 6 channel over here ready to go. And we got our GTA 6 voice room over here ready to go. Gotta go and take over that space. I just saw a post that GTA 6 file size about 650 GB. Alright. GTA 6 and The Witcher. I'm waiting for The Witcher game as well. Witcher should be pretty cool. I got bored of Battlefield. Now there's nothing. Nothing. My paper position is good profit. Regretting should have taken real position. Yeah, I mean, that's the thing. When you're going to paper trade, you're already accepting that you've missed that trade. So when it plays out that you don't feel like you're feeling FOMO, you know? You accept that you've missed the trade. GTA 6 is on November 2026, right? Yeah, I think so. If they postpone it again, holy. Because, you know, it was meant to come out in 2025. Then they postponed it. Towards the end of 2026. Imagine they postpone it again. Damn. I don't even have a PlayStation. The only time I'm buying a PlayStation is just for that game. You know, don't need a PlayStation for anything else. Because PlayStation graphics are just subpar to like PC. The only reason I'll buy a PlayStation is for GTA. And even then, the PlayStation is already outdated. You know, it's already to PS5 is... PS6 is already coming out like in 2 years, I think. You know, it's also kind of annoying. But now I'm going to have a PS5 for only about like a year. They can't even try it. Yeah, they better not. Some explosives might go off in their facilities. That game costs more than it costs to build Burj Khalifa. I think that's what it's called. Burj Khalifa. Insane. They could have built a whole building that they built in that game. A whole building like the Burj Khalifa. And it costs way more. Let's see how much does it actually cost. How much did GTA 6 cost to make? So it costs between about like 1 billion. So just an overall budget of up to 2 billion. Making it the most expensive game ever, with factors like AI, massive world building, and long development cycles. 1 to 2 billion. $1.5 billion, the Burj Khalifa. I swear the fireworks were. There you go, look at that, perfect. 1.5 billion, GTA 6, 2 billion. Holy. Yeah, you know another game which milks people as well is Star Citizen. People literally spend like tens of thousands of dollars on these spaceships. Star Citizen. Yeah, the freaking base consumers of this game, they spend like so much money on it. Star Citizen has raised over 900 million in player funding as of late of 2025, nearing the 1 billion mark. Imagine that, 1 billion. They literally sell spaceships on Star Citizen for like $5,000, $10,000. It's like an open planetary exploration game. But it does look quite sick. But I never spent like $5,000 on something I don't own. It's pretty cool. Anyway, guys, I will see you next time. I will see you tomorrow. Oh, no, not tomorrow. I'll see you on Monday. Monday, things should be kicking off again. And take care, everybody. I hope you enjoyed the stream. I hope you learned something here today. And I will see you all Monday. Adios.